Jeremy Schwartz. WisdomTree launched the Europe Hedged Small Cap Equity ETF earlier this month. Had a great start, a little bit of a reversal last week when the dollar started to weaken. So tell me, does the dollar get to parity with the euro?
Greg, you know, the European small cap hedge theme is a really interesting one for WisdomTree. I think that small cap is one of our most successful new launches. Right out of the gate, you're starting to see great assets, great trading volume, and I think a lot of it is going, people don't know where the euro is going. Traditionally, you have to go to European stocks. You have to take currency risk. This strategy hedges it. Now, you asked if it's going to parity. A lot of people don't know where it's going. Is it going to go to 1 or below? Most people don't really know. So why take that risk if you're a U.S. investor investing over there? I happen to believe it's going to parity. We see the central banks, the Fed's going to be raising rates from June to September. We don't know exactly when they're going to start, but they're on the path to tightening. While the ECB just started quantitative easing, they're aggressively trying to stimulate inflation. They've been having these deflationary tendencies. Draghi was focused on the euro, and you've seen that come down. And I don't see meaningful reason for that to change with the path of the Fed and the ECB. So I say it could go to parity. And I've even seen some forecasters think it could get down as low as 85 cents. So this may be only the midway through the stages. But the bigger point is, should you ever take that euro risk if you have no idea where it's going?
Well, WisdomTree has done very well with its other currency hedged euro ETF. But I want to stay with the small cap one, because do small cap companies really benefit that much from a weakening euro, because they're not the big exporters?
Yeah, you think about the exporters, they're operating all over the world. Maybe only a third of their revenue comes from Europe and 2/3 comes overseas, whether it's the emerging markets, the US. The small caps, it's the reverse. 2/3 of their revenue comes from local European stocks. So it has to be, this ECB QE has to stimulate their local economy, get people spending more, or with a lower euro, get people vacationing in Europe more. You see it's being a lot more cheaper to go to Greece or go to Spain. You get a nice vacation with able to buy a lot more. So that may stimulate that local economy, a lot more, and that's where the small caps come in to access that.
Is it that same reasoning that's going to help the small cap Japan hedged ETF, which you also have? Are more people going to go to Tokyo because of the weakening yen?
I think that whenever you think about small caps, you do think local economy. I think the large caps are very multinational. The small caps are 75, 80% revenue from Japan. What I think is the prime focus of Abenomics this year, you're starting to see wages go up. So you saw the wage negotiations every spring, and the employees started to do well. That should stimulate that more local consumer spending. Of course, it is cheaper to go to Japan as well, so they are seeing a tourism bump. But I think that is another obviously very important strategy to think about currency hedging.
And do you think that the yen will finally get through that 120 level, get to 125, 130, which is where Prime Minister Abe obviously wants it to go?
I mean, the path is, again, clear. The Fed's raising rates. The Bank of Japan is very aggressive on the stimulus, even more aggressive than the ECB. So I think that trajectory is likely to continue. You see a lot of the institutions in Japan diversifying away from Japanese bonds, buying foreign assets, foreign equities, foreign bonds. I think there's pressure on the yen from those perspectives and a few others from the central banks. And so I do think that you see the yen continue to trade that way.
All right. Thanks a lot, Jeremy.
Greg, thank you.
Thank you for watching The Street.